Welcome back to Investing Talk Podcast.
Great to be here.
Today, we're taking a really close look at Symbotic, the company that's right at the forefront of AI-enabled robotics, specifically for those massive warehouses.
That's right. A really hot area.
Definitely. And the big question we're tackling today, the one on everyone's mind is now a good time to buy Symbotic stock?
Yeah. And what we're going to do is basically sift through everything we can find. We're talking financial reports, what analysts are saying, recent news, market chatter, all of it. The idea is to pull out the most important pieces, give you a clear picture so you feel really informed about Symbotic, not just buried in data.
Exactly. We want you to feel confident about what's going on. And hey, if you find this kind of analysis helpful, please take a second to subscribe.
Yeah, absolutely.
Hit that like button for us. Maybe leave a comment. We really do like hearing from you.
We do.
And also, if there's another company you're curious about, one you'd like us to look into like this, just drop the name in the comments below. We're always looking for interesting companies.
Good point.
Okay, so let's start with the basics. Symbotic. What exactly do they do? How are they making waves?
Well, you touched on it. They're a leader in providing AI-powered robotics for these really large-scale warehouses. Think automating the movement and storage of goods.
And they've got some big names using their tech, right?
Yeah.
I think one stands out.
Oh, absolutely. Walmart is a key customer, and that really highlights the scale we're talking about. It's not just small warehouses, it's major logistics operations.
Right. So they're building these robot armies for giants like Walmart. That's pretty compelling.
It is. And this kind of automation, it's less of a nice to have now and more becoming essential for efficiency and speed in retail and logistics.
Okay, so that's the business. Let's get into the engine behind it, the financials. What did things look like for their last fiscal year, the one ending September 30, 2024?
Top line. Top line looks strong. Revenue came in at $1.21 billion. And that wasn't just small growth. It was substantial year-over-year growth.
Wow, okay. What's driving that?
It's largely driven by that increasing demand for warehouse automation we talked about. Companies are really investing in this space.
So over $1 billion in revenue, that sounds fantastic. But what about the bottom line? Is that translating into profits yet?
Not yet, no. They actually posted a net loss of about $209.5 million for fiscal 2024.
Oof. Okay, why such a big loss with that kind of revenue?
Well, it really comes down to heavy reinvestment. They're spending a lot on, R&D, expanding their solutions, and also the costs of actually deploying these massive, complex systems for customers. It eats into profits in the near term.
Right, the cost of growth. So I imagine the gross profit margins are feeling that squeeze.
They are. Margins did improve, but just marginally, hovering around 11%.
11%, okay. And operating expenses? Still high.
Yeah, still significant, lots of spending on R&D, like I said, constantly improving the tech, and also SG&A that's selling general and admin costs. It's pretty typical when a company is expanding its footprint aggressively.
Investing heavily. Makes sense. So how does their balance sheet look? Do they have the cash to keep this up, or are they taking it all out of debt?
As of that date, September 30, 2024, they had about $405 million in cash and equivalents.
Okay.
And total debt was relatively low, around $74 million. So that's manageable.
But the cash flow,
Yeah.
with all that spending.
Right. Operating cash flow was actually negative $120 million for the fiscal year. That's mostly due to investing in working capital for these big projects and, of course, that ongoing R&D spend.
So they have cash, but they're burning through it for growth right now.
Exactly. Liquidity seems adequate for now, but you're right. Continued cash outflows seem likely in the near term because of these investments.
Okay, it's definitely a growth phase story. Now, this market is getting crowded, isn't it?
Yeah.
How does Symbotic stand out? What's their edge against competitors?
That's a great question. They do have some real advantages. A big one is their contract backlog. It gives them visibility into future revenue. And they've built these really deep integrated relationships, especially with customers like Walmart. It's almost like a partnership, which makes it hard for others to just jump in.
Okay, so sticky customers. But who are they actually up against?
Oh, it's a tough field. You've got established giants like Honeywell, Dematic, AutoStore.
Right, big names.
Exactly. And then you also have newer tech companies constantly entering the space. The unique challenge for Symbotic is that they need to innovate on both the hardware, the robots themselves, and the AI software controlling them.
Ah, so it's not just software. That must impact margins compared to some competitors.
It does. Margins tend to be tighter compared to maybe more hardware-focused companies or pure software plays because they have to invest so heavily in R&D across both areas. It's a balancing act.
That makes sense. Yeah. A dual challenge. Okay, let's shift to how the market has been viewing all this recently. What's the stock been doing over the past, say, 3 months? Let's start with July 2025.
July was pretty strong for Symbotic. They announced that significant contract expansion with Walmart we mentioned earlier.
Right, the big one.
Yeah, and that really acted as a catalyst. The share price jumped about 6.5%, and sentiment turned quite bullish.
And wasn't there an analyst upgrade around then, too?
There was a big one from Citi. Andrew Kaplowitz almost doubled his price target from $29 all the way up to $60. That definitely boosted confidence.
Wow, nearly double. That's significant.
It really is. Plus, you had this broader market focus on automation and AI, just generally lifting related stocks.
Okay, so July was hot, then came August, and usually earnings season brings some action. What happened with their Q2 results?
It was a bit of a mixed bag, actually. On August 6th, they reported Q2 revenue of $592 million. That was good, beat expectations by almost $60 million.
Nice beat on revenue.
Yeah, should strong demand continued. But the earnings per share, the EPS, missed. It came in at a loss of $0.05 per share when analysts were expecting only a $1.03 loss.
So the costs were higher than expected again.
Exactly. Signaled those profit margin headwinds were still very much in play. Costs of scaling are still biting.
How did analysts react to that mix?
Coverage expanded. Oppenheimer raised their target to $59. Needham went to $57. Both bullish ratings like outperform or buy.
Okay.
But Robert W. Baird shifted to neutral with a $55 target. So you saw that split reflecting the revenue strength versus the profit concern.
And the stock price. Predictably volatile.
Oh, yeah. Large price swings, lots of trading volume around that earnings release. Very typical reaction to that kind of mixed report.
Got it. Okay, that brings us to September, at least early September. Anything notable happening then?
Things cooled off a bit. There was some insider activity. Director Todd Krasnow sold 4,000 shares on September 3rd.
Insiders selling. Is that a red flag?
Well, it's something to note, but it was a relatively small amount, less than 0.03% of outstanding shares. Could just be standard profit-taking or liquidity management.
Okay, not a massive dump.
No. The stock did dip slightly, about 2.7% on September 4th, on lower volume, kind of settling after the August volatility.
Any other news?
Yeah, on the strategic side, they appointed Mrs. Branderies to the board. She's got a lot of industry experience.
Bringing in expertise. What's the thinking there?
Seems clearly aimed at boosting their global expansion plans and supporting that next phase of growth in robotics and AI, strengthening the leadership team.
Makes sense. Okay, so that's the recent story. Let's get a technical snapshot. As of, say, September 5th, 2025, where did the stock stand? What are the charts saying?
Right, so closing price around $48.25 per share.
Okay.
The range over the last 3 months has been roughly $40 to $54. So you can see that volatility we talked about.
Definitely a wide swing. Support and resistance levels.
Near-term support looks to be around the $42 to $44 area. Resistance seems to be up around $52 to $54.
And moving averages?
The 50-day, which is a shorter-term trend indicator, is hovering near $46. The longer-term 200-day is down around $39.
So still above the long-term trend line.
Yeah.
What about indicators like RSI or MASS-ED?
RSI is kind of mid-range in the mid-50s, so not signaling extreme overbought or oversold conditions right now.
Okay.
MASS-ED, another momentum indicator, is slightly positive, but overall the key takeaway is volatility remains higher than average for this sector. Expect swings.
Good to know. Volatility is key here. Now, you mentioned that one insider sale. What's the broader picture with insider activity? Are executives generally buying, selling, holding?
Yeah, besides that Krasnow sale, there was also a Form 144 filing back on August 19th. That's a notice of intent to sell.
Okay. How much?
It was for 25,000 shares. Again, relatively small, less than 0.03% of outstanding shares. And the filing specifically noted no undisclosed bad news was involved.
So context is important there, too.
Definitely. Overall, looking at the last quarter, there hasn't been a significant net increase in either insider buying or selling. It seems pretty neutral overall.
And what about chatter? Social media, forums? What's the general feeling among investors?
It seems neutral to maybe mildly positive. There's definitely excitement about the tech, but also you see those concerns popping up about the stock's volatility and, naturally, the negative cash flow.
Understandable concerns. Okay, pulling back to the professionals, what's the consensus among Wall Street analysts right now after all that recent news?
Analysts, broadly speaking, remain pretty positive on the long-term growth story. They see the potential in warehouse automation.
But there's always a but.
But yeah, they are definitely flagging those near-term concerns we've discussed, valuation, given the run-up, and the cash flow situation.
So what's the overall rating generally?
It tends to be in the hold to moderate buy range. We haven't seen any major downgrades or upgrades recently that would signal a big shift in their thinking. It's kind of a wait and see on profitability, it seems.
Okay, cautiously optimistic maybe?
That's a good way to put it. Cautiously optimistic, watching for execution.
All right, let's look ahead then. What should investors be watching for in the near term? What are the potential catalysts that could move the needle in the next few months?
The big one is the next quarterly earnings report. That's expected in early November 2025.
Right, always key.
It'll give critical updates on how those big contract deployments are going, progress on margins, efficiency gains. Any solid news there could be a big driver.
And besides earnings,
Any announcements of new large contracts would be huge, especially if it's with another major retailer, someone beyond Walmart. That would show broader market validation.
diversifying the customer base makes sense. Okay, those are near term. What about the longer term picture? What are the big picture trends or possibilities that could really fuel Symbotic's growth over years?
Well, the biggest one is just the massive wave of warehouse automation itself. It's driven by these huge secular trends, e-commerce growth, the need for faster logistics. That's not going away.
It's a tailwind for sure.
A huge one. Then there's the potential for Symbotic to expand, maybe into new industries beyond retail or into new geographic regions. That could happen organically or through M&A, buying other companies.
Expanding their reach.
Exactly. And finally, just continued improvements in their own AI and robotics tech. If they can make their systems even smarter, faster, cheaper, that could boost margins and open up an even bigger market for them.
Lots of potential avenues for growth. Do we have any specific dates or events on the calendar for the next, say, 3 months that people should note?
We do have a few things to keep an eye on. Around October 8th, you might see some movement due to ETF quarterly rebalancing. Institutions might buy or sell based on index changes.
Okay.
Then November 6th is that key Q3 2025 earnings report. Expectations are for continued revenue growth, maybe $520, $540 million, and everyone will be watching those margins.
Right.
Also in early November, you might get updates related to holiday season logistics demand, which could impact sentiment.
Good point. Peak season.
There's also a rumor of a major institutional buy announcement around November 21st. If that happens, it could boost confidence?
A rumor. Okay. Important distinction.
Yes. And then in early December, we expect their Q4 guidance release, which will give us their forecast and strategic outlook for the next period.
Okay, a pretty busy few months ahead then. You mentioned a rumor there. Are there any other sort of speculative catalysts or market chatter floating around? Stuff that's not confirmed but could be exciting.
Yeah, there's always chatter with these kinds of stocks. One persistent rumor is about a potential partnership with another huge retailer, maybe like a Target or a Kroger, evaluating Symbotic's platform.
Wow, that would be big.
Huge validation, yeah. There's also sometimes talk about takeover interest. Larger tech companies wanting to get into robotics might see Symbotic as an attractive target.
Interesting. M&A potential.
And whispers about new patent filings, maybe around more advanced AI for optimizing warehouse operations. That could boost their perceived tech advantage. And finally, those board appointments have definitely fueled speculation about a major international expansion push, maybe into Europe or Asia.
So lots of potential upside drivers, even if they are just rumors for now.
Exactly. Adds to the potential long-term story, but you have to treat them as speculation until confirmed.
Absolutely. Now, let's talk about the flip side. Every investment has risks. What are the specific risks tied to Symbotic itself that investors need to keep in mind? What does their own reporting say?
Looking at their 2024 10K, their official filing, they highlight several key risks. One is the timing of actually delivering on these large, complex contracts. Delays can happen.
Execution risk.
Exactly. Execution risk is big. Can they deploy these systems effectively, on time, on budget? Then there's customer concentration. Their heavy reliance on Walmart is definitely a risk factor.
Right, if something changed there.
Precisely. Financially, there's the ongoing negative cash flow issue we discussed, the rising costs for labor and R&D, and potential volatility in their supply chain for getting the hardware components they need.
A lot to manage operationally.
Definitely. Managing these huge projects without big delays or cost overruns is critical, especially with those margins being tight already.
Okay, those are company-specific risks. What about broader market or sector risks, things outside their direct control?
Well, the whole warehouse automation sector is tied to the health of retail and consumer spending. If there's an economic downturn, companies might pull back on these big automation investments.
So it's cyclical to some extent.
It is. There's also the constant threat of technology disruption. Someone else, maybe a legacy player or a new startup, could come out with a better, cheaper solution.
Always a risk in tech.
Always. And finally, like most growth stocks, Symbotic is sensitive to broad market swings and interest rate changes. It can get pulled around by overall market sentiment, regardless of its own news sometimes.
Good points. Okay, we've covered a lot of ground. Let's bring it all together. The big question, is now a good time to buy Symbotic? What's the overall rating and the investment thesis here?
All right, crunching it all, we'd give Symbotic an overall rating of about 6.5 out of 10.
6.5. Okay, what's the thinking behind that number? Well, on the one hand, you have really strong secular growth potential. That logistics automation wave is real, and Symbotic has premier customers like Walmart locked in. That's a very compelling long-term story.
The other hand.
The other hand holds those near-term risks. The lack of profitability, the negative cash flow, the intense competition, and that persistent stock volatility. That really tempers the enthusiasm, especially if you're looking for short-term gains or certainty.
And the insider and analyst sentiment isn't exactly screaming, buy now.
No, that neutral to moderate sentiment doesn't suggest an imminent big surge or re-rating is widely expected. It reflects that balance of potential versus current challenges.
So who is this stock best suited for then? What kind of investor? What kind of timeline?
It really seems more appropriate for long-term investors, people who believe in the multi-year growth story of automation, who are comfortable with significant volatility along the way, and who are willing to wait for profitability.
And short-term traders.
Short-term traders face a lot of unpredictability here. Yes, the sharp swings might offer opportunities for high-risk momentum plays, but there's a lack of consistent, predictable catalysts for quick flips. The core narrative is longer term.
Okay, long-term play for those comfortable with the bumps. That's very clear. So here's a final thought for you, our listener. Considering Symbotic's really innovative technology and that strong customer base, but also weighing its current financial path and the competitive pressures, what role do you think companies like Symbotic will ultimately play in reshaping global logistics? And more importantly, how does that shape your own investment strategy looking forward?
A great question to ponder.
Thank you so much for joining us today on Investing Talk Podcast. We hope this look at Symbotic gave you some valuable perspective.
Hope it was helpful.
Remember, this is all for informational purposes. Always do your own research and think carefully before making any investment decisions. We'll catch you on the next one.